The Philippine stock market did a 180, strongly rallying last week, bringing the markets back to life. Let's discuss strategies. I'm Dan Slim, and welcome to another episode of Monday Market Outlook. So let's start off with some economic news. Unemployment numbers came in last week at 4.3%. This puts us at the same rate back in December 2022. We also saw improving underemployment numbers coming in at 11.7%. Underemployment basically measures how much are employed in a job where their skills are underutilized. It could also mean you're only employed part-time. No? In other news, remember that the SIM registration deadline is at July 25. So this puts the spotlight on our telco stocks. We currently have a little over 60% registered, but if we look at the breakdown, we can see that Globe and DTotel lags behind Smart with a 74% of their subscribers already registered. This is really why I haven't been recommending telco stocks, especially for this year. Let's see how this affects our telco bottom line and earnings in the next few months. Now, the 10-year treasury yields, which we have been monitoring, fell sharply to 6.322, hitting a resistance of 6.75. Guess what happened to the PSEI? So the PSEI bounced off our critical level at 6,375 to end the week at 6,624. No? So remember, last week, we were anticipating a possible bounce of this level and may hit this trend line resistance. Lo and behold, a strong rally in the index broke through trend line resistance, broke through this heavily traded zone, broke through 6,550. If we look at the weekly charts, this strong candle may signal a trend reversal. Now, this level, 6,375, has been a very interesting level so far this year, as we've seen the markets reject this level time and again. Now, back to the daily charts, as the bulls have clearly taken over the markets, next resistance would be at around 6,650, but given its momentum, it may easily reach 6,750. Investors should wait for the market to pull back to around 6,550 and defend this zone to be on firmer ground for the next rally. Now, this would be a good level to start buying back into the index. But don't get your hopes up though. Remember that this rally is riding on the heels of low volume. At 5 billion daily volume traded last week, we are still trading below our normal average of 6 billion. So let's go to our individual stocks. We start with BDO, which is at an all-time high. Investors probably have an idea of how good BDO's earnings will be in their next earnings call, driving up the stock to new highs. Is this a case of buy the rumor and sell the news? Watch out for BDO's reaction at 150. Usually, a breakout from this type of consolidation means a minimum upside equal to the height of the consolidation. In this case, we see a potential move towards 155. So be ready to top slice BDO in the coming days. Let's move on to BPI. If you were able to follow our previous episodes, we identified a possible swing trade for BPI. Taking our cue from BPI's past price action, we've identified this bottoming pattern as a sign that it may support the 100 peso level. Now, our trigger price is 102, and you always put a stop loss a bit below the support level. And of course, take profit should be around the zone of our next resistance if it breaks out of this. Now, in this case, we've hit our take profit zone at 114, and it has even surpassed it at 115. So monitor BPI's price action in the coming days and be ready to take profits at the first signs of either a reversal or a topping. Congratulations to those who were able to take the trade. Now, moving on to Metrobank, MBT has traditionally lagged behind BDO and BPI, but it has already formed a higher low and has currently formed a higher high. So hopefully, we will see a move towards 59.25, and we'll see how Metrobank reacts at that zone. But overall, the banking sector may start showing signs of topping as interest rates may already be at its peak. The BSP has paused interest rate hikes, and given the current inflation numbers, may start cutting rates by next year. And while this is a long ways off, remember that the market is a forward-looking indicator, and bank earnings will start taking a hit once rate cuts begin. But for now, banks will continue to enjoy high net interest margins but may no longer have any more upside moving forward. So something to take note of for the banking sector in the next half of the year. Moving on to our defensives, AP bouncing off of our 36 support level, it even dipped up to a low of 34.90 and was strongly rejected by the markets. Now, hopefully, we can see a move back up to 38. SEC and DMC in the middle of nowhere, but remember that SEC and DMC usually declares their dividends by October. Given that they are flush with cash, we might anticipate a special dividend this year. So from the defensives, we move on to the food and beverage stocks. We have URC hitting that downtrend line hard. Things might not be looking good for URC. DNL able to bounce off of 680 support. Hopefully, it can challenge the 750 resistance and move on to 796. JFC, very strong move, and it's currently near its resistance at around 260. Now remember our strategy, buy low, sell high. So we have buy low. During this time, we already identified that this may be a possible low for JFC. Buy low, we are currently at the high level. Remember that JFC has hit 260 resistance a couple of times. So this has proven to be a very strong resistance point for JFC. Watch its reaction at 260 and you may actually consider taking profits, top slicing your JFC position when it hits 259 or 260. Now, onto the conglomerates, SM and AC in the middle of nowhere. AC, watch its reaction when it hits 600 again, and hopefully it doesn't break down all the way to 580, and we'll see how it reacts at that level. Bloomberry, of course, consolidating nicely. We have A-REIT and C-REIT. Both of our REIT picks steady despite the market decline. Of course, APX, our recession hedge, as treasury yields have gone significantly down, gold has rallied back along with APX staying resilient despite the drawdown in gold. I'm also keeping a close watch on real estate stocks because in contrast to bank, real estate stocks don't like high interest rates. But if interest rates have peaked, could real estate stocks be at the bottom? High interest rates will continue throughout the year and may affect ALI and SMPH bottom line and revenues. At this point, I'm looking for some signs of rotation into the real estate sector, and we can probably slowly accumulate once we see more definite signs of this sector picking up. Onto the global markets now. CPI numbers came in at 4.8% with CPI numbers coming in at 3%. Inflation numbers have seen a steady decline in the past year, led by the decline in food and energy prices. Not only that, PPI numbers also came in below expectations at 0.1%. And as we see in the chart, there's a sharp decline on the PPI numbers since this year. While the Fed is still pushing through with a 25 basis point rate hike this July, the September target rate probabilities shows a decline for further rate hikes down to 15% from last week's 24%. So the markets reacted positively to the news as we take a look at the S&P 500 charts. As predicted, the S&P 500 futures rallied to 4,500 and formed a shooting star to close the week. Now remember, last time this happened, the market had a pullback. Is this a precursor to next week's price action? If we zoom in to the 2-hour charts, we can see this heavily traded zone at 4,450. And if we draw a trend line, we can see that this zone also shows a confluence of support. So we could possibly see another correction in the next week as the market starts to digest the start of earnings season. So next week, we continue bank and airline earnings reports as well as kicking off tech earnings on Wednesday with Netflix reporting. It would be interesting to see how their crackdown on password sharing will affect their subscriber count and their revenues. It will be a busy week starting July 24 as we see earnings season get into full gear with the Magma stocks reporting. Magma being Meta, Microsoft, Google, and Apple. Remember, last earnings season, we had most of the companies providing not so promising guidance. So let's see if they manage to beat low expectations they've set for themselves. So that's it for this week. I hope you found this episode useful. Like this video, subscribe to the channel, and as usual, good luck on your trades. manage your risk accordingly, and I'll see you again next week. Bye-bye.